Good morning, good morning, good morning, everybody. Hey, did you miss me? I was on vacation last week. They say that when you miss someone, that means you actually like their show. So maybe, just maybe, I'm hoping that you missed me last week. But if you didn't and you were on vacation and you had an excellent 4th of July, I will not be insulted. I had an excellent vacation. I'm here recharged and just fired up to continue our talks about women, money, personal finance, and investing. So it's 10 a.m. on Thursday, and you know what that means. It is time for Her Money and Investing Show with yours truly, Jessica Perrone. Yes, the wild. I hear it. I hear the applause. Oh, please stop. I'm just joking. Please, yes. So a little bit about me. I'm Jessica Perrone. I'm the founder of Her Financial IQ. And you can find me on social media with @HerFinIQ. I'm on TikTok. I'm on LinkedIn. I am on Instagram. You name it. If you're looking at it, I'm probably out there. So please follow and watch the show. We have a couple of announcements here. It has been just such an amazing week at Her Financial IQ. I do want to do a shout out in August at the Coco here in Summit. They are offering virtual before investing workshops. Yes. So it is basically a boot camp. My 4-week course is going to be boot camped. One session, you get to learn all about your financial ducks and getting them in a row. And I have a special added bonus now. When you attend that class, you will also get a copy of my workbook that I just put together. It's brand spanking new. So I'm really excited to gift that to the ladies that attend. And you don't have to be a member of the Coco. You can attend it and be a non-member. And because it's virtual, you can attend it from anywhere. So yes, definitely check out my before investing workshop, and you can check that out on my events page on herfiniq.com. So I'm also going to be on a radio show this weekend. It is Seattle-based About Money show. That is Saturday, 12 p.m. Pacific time or 3 p.m. Eastern time. The call numbers is KLFE 1590 AM. So it's like I guess I'm really going to be on radio. I don't know if does anyone listen to the radio anymore? I don't even know if anyone listens to the radio anymore, but I will be there, and the recording will be online as well. And I'll be sharing that on social media. So if you can't listen to it live, I will be sharing the recordings. And if you want to stay on top of all the events that I'm going to be speaking at, if you want to stay on top of I'll be releasing my fall schedule soon, as well as the self-directed classes. If you want to stay on top of those announcements, definitely sign up for my mailing list. Now, I absolutely love the Money Talks. I've been part of this Money Talks program out of Pittsburgh for the spring session. And though the classes have taken a recess, for summer, we have had something called Money Chats, where the ladies come together. They're working on my workbook. They're getting their financial ducks in a row, but they're chatting about different experiences they're going with their financial situations and what they are doing to better themselves. And let me tell you, this group of women is so inspiring, and I'm so proud of them. And listening to the stories and hearing them use the terms like getting their financial ducks in a row, or what is the return on my investment, hearing them put these things that they are learning through Her FinIQ just gives me goosebumps. It really does. But one of the questions they had last night, and I'm sure if they had this question, it was going to be a question that you guys want to hear about as well. And so one of the questions that came out of the program last night was whether or not, that had to do with 401ks, and whether or not to contribute to a 401k if you have a boatload of bad debt. So the question, to repeat again, is should you be contributing to a 401k if you have a lot of bad debt. And so let me just go in first and define what bad debt and good debt is. Okay. So good debt is defined as money owed for things that can help you build wealth or increase income over time. So things that are considered good debt would be student loans, mortgages, or business loans. Now, in good debt, I might even put in just a couple other things as well. So, for example, if you are a nurse and you need certain equipment to be a nurse, or if you are in the trades and you need to invest in your tools, right? Then I would also consider that to be good debt. Okay. So, again, in the overall scheme of things, and I'm going to talk a little bit about this at the end, is my new version and my personal new definition of good debt versus bad debt. Okay. So I'm slightly going to be tweaking these definitions Jessica style. And I hope that you just lay with me on this. I'm going to get there. I swear. You know, I always come back. I go down a rabbit hole, but I always come back to the point here. Okay, so bad debt refers to things like credit cards or other debt that do little to improve your financial outcome. So an example of bad debt would be like impulsively seeing an expensive handbag, you not being able to pay it off at month end, right? It goes on your credit card. The purse goes on the shelf and you are stuck paying high interest rate, maybe 18, maybe 20, maybe 23% on this item. That would be considered bad debt. Okay. And this is the kind of debt that we are talking about when we're talking about paying off the bad debt versus, investing in your 401k. So here are some things to think about when you are considering this conundrum. So the first one would be, if the interest rate is higher than a market return. Okay, investigate if that bad debt has a higher interest rate than a market return. Okay, so for example, let's look at this. So say you have a credit card that has a 20% interest rate. Okay, and let's say, for example, if you invested in your 401k, and now there's different returns. There's different returns for different types of risk levels, different assets, etc. Now, I like to use the 6 or 7% return on investment dollars because that's what you see. It's basically a safe number that a lot of financial advisors, that a lot of media use when talking and estimating the market returns. But it does vary. And it's not a guarantee. So I'm using this as an estimation as well. So say if you invested in your 401k and you could receive a 7% return on your investment dollars, okay? You would actually be losing 13%, right? 20% in interest on your credit card versus 7% making in the markets, right? So you would actually lose 13% on the money that you are investing. Yes. So that is an equation that you can kind of keep in your mind when you are thinking about, do I invest in my 401k or do I pay down that bad debt? Okay. And what I do suggest doing is when we are looking at our bad debts and paying down bad debts, and this is also part of the workbook that I put together for anyone taking my Before Investing class. Excuse me, watch, I can talk today, don't mind me. But it is very helpful to sort your debt by highest interest rate and start tackling those first. Okay. Now, there is a scenario where I said first, you kind of throw out the window. And that is if your company is matching. Okay. If your employer matches your contribution on the 401k, then regardless of your debt levels, you should contribute enough money into that 401k to receive the employer match. If you don't contribute, then you're throwing away free money. Okay, so that is the one exception of the rule right there. Now, Another exception to the rule is low interest rate loans. Okay, so a lot of people refinanced over their mortgages when interest rates were low. So if you have low interest rate loans, right, and your return in the market is higher, right, then it is suggested that you start putting money away in the 401k. And there's two reasons for this. Not only is the return higher, right? So therefore you're making a return on your money. That's the first one. But the second one, okay, would be that you could be cultivating your credit score. And when you are cultivating your credit score, the higher the credit score you have, the more you save in the long run. Okay, so with that said, if you have a low interest loan of whatever it is, whether it's student loan, whether it is a mortgage, and it is lower, right, than your return in the markets, and by doing your monthly payments on time, right, you are increasing in cultivating your credit score, then that is helping you twofold. That debt is actually helping you twofold. And I would even say that that would be good debt. Not only is it something that is going to increase, give you a return on the investment, right? But because it is a low interest rate, it can also help you cultivate that credit score. Okay. So with all said, what I would recommend here is to pay off that bad debt, or just not get into that situation in the first place. Yes, I know. It's so hard. And it streams from, getting that first credit card saying free money, right? But hunker down, ladies, hunker down, get that bad debt paid off. Look at your budgets, look at your needs and your wants. Look at the workbook. I'm so proud of this. I worked so hard on it. But it really can help you guys get your financial ducks in a row. So that is my skinny on bad debt, paying off bad debt versus investing in your 401k. So just my 2 cents on that one. And of course, investigate it. Talk to a market professional. These are all things that I see in my day-to-day. And as an educator, I love to answer your questions. So speaking of the markets, before the markets opened this morning, it was a little scary. Yes, year to date, the SPY was down about 20, just a little over 20%. And that was even before the markets opened. And what did happen was banks, their earnings disappointed today. Yes, they did. And so the markets didn't like that much either. Just more bad news seems to be coming. And after yesterday's CPI number, so the consumer price, that CPI is short for consumer price index. And it's basically it surged to an annual of 9.1%, marking the fastest pace in 4 decades. So these are some of the highlights from the CPI number from this morning's Bloomberg Open. It's their free newsletter. I love this newsletter. If you are interested in like a quick read in the morning to get you up to speed on what's going on in the markets, I definitely recommend this. But what they were saying is that the CPI increased 9.1% year on year from 8.6%. And that's more than expected. And because of that, the Fed is, on track for at least a 75 basis point. That's 0.75% hike this month. But there might even be a chance of a 1% move. Yeah, that's some interesting stuff. That's actually good for our savings accounts, right? But not so good for mortgages. No. But other items that came out of that report is that, and you guys already knew this last night in the money chats, you all said rents are going up, and you're feeling it. You're feeling the renewals coming around, and you're like, what? rent is going up. And that is something that they're reporting on in the CPI number. And in addition to that, the biggest part of this number was gas prices. Yes, gas prices rose 11.2%. And food jumped 10.4%. And that's the biggest increase since 1981. So you might say, well, I've been seeing the prices at the gas tank at the gas stations coming down. And I was so excited. I was so excited until I was reminded, I was so excited to see my gas come down to $4.56 a gallon. I was excited for that after, paying over $5. And then I was reminded it's still really high. Yes, it is still really high. And I was thinking about when I was a kid, and I was thinking about how we would be able to get gas for under $1 a gallon. Do you remember those days? Does anyone remember those days? Oh my goodness. So with that said, I was thinking, there was two headlines that caught my attention about how what are some macro events out there that could potentially bring down the cost of oil, the price of oil. So what I noticed three headlines that kind of piqued my interest. And so the first one was that India and Brazil are making agreements with Russia to buy oil. Now, India is a huge consumer of oil. They are. So if they are able to buy Russian oil, right, from however they are doing it, with the sanctions and whatnot, they are starting to get creative. Some nations are getting creative on how to buy that Russian oil. But if these large economies are able to get oil from another source, right, then potentially the price of oil could come down. And we also see Biden in Saudi Arabia this week as well. There is a little drama around that. I won't go into it, but Biden is hoping to convince the Saudis to produce more to bring oil prices down. So with that said, we all know that high oil prices affect the price to fill up our tanks in our cars, right? And also it affects the cost of the transportation of goods and the cost of even plane tickets, right? Because the cost, it's expensive to fly those planes, and the jet fuel, increases as well with the price of oil. So, but what you didn't probably know is that high oil prices also affect the cost of, drumroll please. Yeah, you guys are not going to believe all the products that you use in your everyday life that the high oil prices touch. Can you guess? And for those that took my my identifying investments in the sectors and took the energy class, you're not allowed to say anything because you know all this stuff already. So you're not allowed. Okay, yes, you can. You can. Okay, you can chime in the chat, but don't give away too many secrets. Yes, I have a class that actually goes into the workings of a lot of the sectors and the industries within that sector. So you can add different companies and understand how these different sectors and industry works, and you can add them to your identifying investment sheet. But don't worry. Everything I'm going to talk about today, you'll totally understand. You got this, ladies. I wouldn't throw it at you if I didn't know that you would understand. So, drum roll. High oil prices also affect the cost of plastics, soaps, detergents, drugs, fertilizers, pesticides, explosives. Oh, we buy explosives every day, right? I'm joking. I'm joking. Synthetic fibers, rubbers, paints, epoxies, flooring, and insulating materials. And then they are also in aspirin, luggage, boats, automobiles, aircrafts, polyester clothes, and and tapes as well. Does anyone use tapes? Does anyone use tapes anymore? Maybe the vinyls, right? The records, that would be petrochemicals as well. And that is all because of petrochemicals. So petrochemicals, and this is from the Britannica website. Petrochemicals is a large group of chemicals derived from petroleum and natural gas and used for a variety of commercial purposes. Okay. And Patrick DeHaan, and he is the head of petroleum. He's the head of petroleum analysis over at Gas Buddy, had this to say about it. And he said, petroleum is the root of so many different products, from makeup to plastic bags to fertilizer. You can't escape the use of oil. And what's interesting is that petrochemicals actually take up about 40%. So 60% of oil goes to gas products, right? And then 40% goes to petrochemicals. So even if we do go all green EV, right, we will still be using oil products in products that contain petrochemicals. Okay, so let's talk about this. Let's talk about this a little bit. So here are some of the surprising items. So the first one is shoes and handbags made from vegan leather are petroleum based. Did you guys know that? So if it's not leather, it's made from oil products. Yes. And so are, for example, nylon stockings, microfiber fleece, and all sorts of clothing made from synthetic materials. Plastic food packaging, when you go to the freezer section, plastic bags, your bread, plastic bags, right? Even those plastic grocery bags. And here in New Jersey, those plastic grocery bags are now you're not allowed to have them anymore. So even your reusable bags are made from petrochemicals. Yes, for sure. And so is the plastic parts in smartphones, computers, and TVs. And the car prices, right? We all are seeing that there's bottlenecks on cars, right? But if the price of oil stays high, it's not just the cost of putting gas into the car, right? It is also that petroleum is the main ingredient in tires and plastic body parts, foam seat cushions, all those things have petrochemicals in it, including the paint on the car. Yes, paint as well. Now, surprising could be the items in the pharmacy that have petrochemicals in it. Burn ointment, cold and allergy pills, gummy vitamins. Yeah, gummy vitamins, adhesive bandages. They're all made with oil. And you'll also find it in building and furniture materials too. So particle board, yep, petrochemicals, asphalt roof shingles, plywood, shag carpet. Yes, carpets as well. If it's not made from wood, yeah, petrochemicals. So it's crazy. It's crazy when you think about all the items in your household that are made from petrochemicals. And if you think about it, as long as our oil prices stay elevated, this inflation really can't come down. It can't, because of all the inputs from oil. And I actually want to talk about a case study, and we talked about this in the Identifying Investments in the Energy Sector. We did a case study on Sherwin-Williams, And I actually just replotted it this morning on my charts. I did a Sherwin-Williams paint versus oil prices, that's USO. And yep, still a negative correlation or an inverse relationship. So what that means, the negative correlation or inverse relationship means that they go opposite. Okay. So when oil prices are high, the stock price of Sherwin-Williams goes down and vice versa. Okay. What is also interesting though, and Credit Suisse's John Roberts brought this up as well. And he said that, it isn't just purely oil, though the chart does show that. However, he was saying that the demand for paint and related products came down because of the slowing housing market. Yes. So if there's less houses being worked on, being built, less people are buying, because whenever you buy a house, you want to paint it when you move in, etc. If that is slowing down, then the paint market is also going down. So with that said, another item that seems to sort of, work in an inverse as well is solar stocks. And this is really interesting. And I wanted to bring up solar stocks because it is a case of moving on news flow. And the example that I wanted to give here is right around 6/6, so June 6th, the media was picking up on the fact that the White House wanted to create sorry, here we go. I lost my place there. I started down my own rabbit hole there. So, and this is the headline. It said President Joe Biden will take executive action to boost the US solar sector, seeking to revive clean energy projects stalled by a trade dispute. Okay, so that was the headline from June 6th. And based on this, guess what happened? Solar stocks. Yes, solar stocks went up. Okay. Now that we are seeing gas prices come off at the gas station and oil prices come down, right? What we are seeing now is that solar stocks are dropping and there's less demand for solar stocks with the decrease in oil prices, right? So that is sort of interesting as well. So that's something to think about when you are thinking about investigating these concepts, right? When we're looking at different sectors, it's really helpful to see how they move in tandem with other sectors as well. So those are my examples of oil and paint and oil and solar as well. Kind of neat, right? It's kind of neat how that all works. Let's see. Moving forward, I'm going to be closing here with some interesting headlines. You know that I read a lot, and sometimes there's just headlines that kind of pique my interest, and I just like sharing them with you guys. And the first one here was on July 14th. This one came out as Seeking Alpha, and it has to do with the Kellogg company. And okay, this is a good one. Okay, so Kellogg lost a legal challenge in the UK when a British court rejected its claims that the government's formula to measure the nutritional value of cereals is wrong. Yeah, okay. So basically, Kellogg's was saying, the way that you are doing nutrition in the UK is wrong. Okay. But the British court rejected it. So this is what they were trying to do. The article goes on to say the food company was trying to argue that the UK's Department of Health and Social Care did not factor in the nutritional value of milk when setting its rules on cereal. Oh my gosh. Okay. And the ruling means that food deemed high in fat, sugar, or salt will be banned in October from prime spots such as checkouts, store entrances, aisle end caps, and with their online placements. So yeah, so that is the UK. The UK is cracking down on products that are deemed high in fat, sugar, and salt. I kind of think that's an interesting thing. I do. I think that's an interesting concept. Okay, and then another headline that sort of like piqued my interest, and this is also out of the EU. And the EU targets to cut pesticides in half under new green food plan that will be revealed. So that is from June as well. And then lastly, the strange. Yes, the strange. So this is coming from the Hill, and on this was actually from today. And the House approved an amendment to the annual defense spending bill that would establish a secure system for reporting, get this, unidentified aerial phenomena, UAP. UAP. So it isn't UFOs anymore. It's now UAP, unidentified aerial phenomena. Okay. And that is, excuse me, sorry about that. It is my daughter, and she desperately wants to get in touch with me, I'm sure. And that's what it's like. That's what it's like as a mom trying to work, and we all know how that is. But going back to UFOs, because UFOs is more important than the daughter, the oldest daughter, right? No, she doesn't need anything. She just loves her mama. Okay, so the system set up by the amendment would receive reports of any event relating to unidentified aerial phenomena, in addition to any related activity from the government, federal contractors, or programs. Yes, yes, so interesting. It's not UFOs anymore, it's UAPs. And in closing, I like to close with the inspiration of the day. And today's inspiration is there is no limit to what we as women can accomplish. Let me repeat that. There is no limit in what we as women can accomplish. And that is from Michelle Obama. And that is my wish for you, to see no limit in your potential. And I want you to achieve your goals and your potential on financial wellness and in your quest to build your wealth. I am so amazed and grateful to the community we are building of women committed to financial health, growth, and freedom. You may be overwhelmed in getting your financial ducks in a row, but it is baby steps. You can do it. You're doing it just by being here today. And should you wish to take your money and investing journey outside these talks and this show, sign up for my mailing list to be notified of upcoming interviews, my panels, workshops, and announcements for the launch of my self-directed courses. I'm Jessica Perrone, founder of Her Financial IQ. You have been watching Her Money and Investing Show. May the markets be in your favor. Bye now. Take care. Thank you so much for coming. Take care. Bye. Oh, Adina, that's a funny. Oh my gosh. Yes. Yeah, it probably is. It is probably my daughter asking if she should invest in the markets. Yeah, that is probably her. She would do something like that. You're absolutely, you know her so well, Adina. Take care. Bye.